All right, so even as most media outlets have confirmed that Fed Governor Lisa Cook did indeed list two properties, and there's some other concerns involving them, many have also shifted the focus to Trump's war on the Fed, and of course, more than anything else, the sort of crisis of Fed independence. I'm going to bring in now Allianz Chief Economic Advisor Mohamed El-Erian. And Mohamed, you know, I want to begin with the notion of Fed independence because I think there's been an effort, if you look at what happened when you had three vacancies under Joe Biden, to stack the deck, so to speak, along ideological lines. And if the deck is stacked along ideological lines, is that true independence anyway?
So, Charles, it's a big question whether it is stacked along ideological grounds. For a long time, the understanding was these are technocrats. They have long-term objectives, and they are guided by their economic judgment. The problem is that there's been long delays to reforming the Fed. So you've had a few things that have come in that have caused outcomes to be less than what this country should expect and less than what this country needs.
Yeah, I'm really worried. You know, I looked at some of the videos that Lisa Cook had and some of her comments about President Trump and, you know, going in to fight his agenda rather than, you know, looking at the data for a data-dependent Federal Reserve. It's worrisome. I want to go back to the Jay Powell and of course, the major news that shifted almost everything on the street with respect to whether it's the 2% targeting, what's going to happen with the zero bound. You say that he missed an opportunity last week. I'd like you to explain to the audience what you think he did wrong and what you think he should have probably have done since that was his last Jackson Hole speech.
Yeah, so once a year, central bankers gather at Jackson Hole. That is meant to be an opportunity to step back and think big ideas, ask the big questions, and not provide a play-by-play analysis of the past. For reasons that he must best understand, Chair Powell decided to ignore all these critical strategic issues and just focus on the play-by-play. The result of that, Charles, is that important aspects that have to do with how the economy is changing, how the global economy is being rewired, how the labor market is functioning, things that are critical to the well-being and prosperity of this country do not get the air and the discussion that they need. So this was, for me, a missed opportunity. It's particularly so, this was his last one. He's been there as chair 8 times. People expected him to reflect on what he's learned and look forward, but he didn't. So it is a missed opportunity, and it is one that always keeps us in the immediate and doesn't make us focus enough on the important.
Now, Saturday, there was a speech that didn't get as much press on Wall Street, but many observers say it was critically important. This is from the head of the Bank of Japan that took on these things that you talked about. The fertility crisis, of course, Japan having an acute problem there. We have to bring up maybe the AI situation. And to your point, not maybe the end of globalization, but certainly the changing aspects of globalization. I'm really concerned about Fed policy or central bank policy against the backdrop of those things. Is the old playbook the right playbook for that?
Pretty well. Certainly their models have been wrong, and we saw that they got a major inflation call wrong in 2021 because they didn't understand the changes to the economy. We are 4 years since the inflation surge, and we are still above the inflation target. We're not promised to get to the inflation target till at least 2 years. So whatever metric you take, they have not met it. And part of that is because they have not done what other central banks have done, which is try to step back and look. You're right. The Bank of Japan did that over the weekend. So did the European Central Bank. So did the Bank of England. And it's part of this groupthink of this very close intellectual circle. I've often argued, do like the Bank of England, bring in some external members that bring different perspectives and that avoid this rut that we've been in.
But not lawyers. So anyway, I got less than a minute to go, and so many things I want to talk about. But even before the last FOMC meeting, you argued for a rate cut. And I got to tell you, you took some heat for that. I got to tell you, it was very bold on your part in the sense that, a lot of your peers thought that was the wrong thing to do or say at that time. So I'm just curious as to why your work took you there, and congratulate you on being brave enough to say it.
What took me there is analysis, and not just looking at macro data, but listening to what companies are telling us. Companies drive this economy. We get opportunities to hear what they're seeing on the ground. And it was clear that the labor market was weakening, and we should not be risking the labor market. Why was I outspoken? Because I've always shared my views. And I think it's important to be tested. Ironically, now, people are looking back and saying, you know what? The Fed should have cut 25 basis points.
Yeah. Mohamed, again, there's so much more I'd love to talk to you about. Thank you very much for coming on. I hope we can pick this up sometime soon.
Looking forward to it, Charles. Thank you for
very
having me
much.
on.
Appreciate it. All right.